Buenos dias. Thank you all for coming here. I'm just curious, how many people here have cryptocurrency in their wallet right now? And how many people are thinking about investing? Wow. And how many people here actually know what an ICO is? Okay, wow. And how many people here are thinking about doing their own currency, their own ICO? We should talk later. You know, we're living in a very interesting time, and the person to my sitting over here, he's done many things in his life, but Stephen, you know, if you look to Ethereum and try to understand what is the driving force, what Stephen did is he actually created the killer app for Ethereum. He created the ICO, and his legal work to figure out how to do that continues to change the world of finance globally, and it's a very interesting time to be living in. To be working with people that are changing stuff. And I was going to talk today a little bit about perspective about things. I am not from the crypto world yet, but I recently joined it. My background has been in communications, because in 1995 and 1994, when I started looking at the internet, there was actually cryptocurrencies then, people trying, because the thing about the internet, it actually is disruptive, and it's disruptive because it changes the way we do things, and it forces us to think and rethink about what's happening. And some markets were quicker to be changed than others. The world banking markets were very hesitant to allow change. They still are. But if you were on the internet in 1995, you might have remembered something called DigiCash. And besides DigiCash, there were several others also trying to create transactions. Ultimately, it was PayPal that won, but it wasn't like the innovation didn't start back in the early 90s. When we talk about disruption in this case, we're talking about a brave new world. And I don't want to be overly underdramatic. There is change that is happening. I don't know if any of you have read I posted on Medium at the end of the year something called 2018, the year of blockchain and the bit economy. And I kind of shared a perspective about the way I saw 2018 shaping up. And the big change for me is that this becomes real. And the opportunities have never been greater. And so those of you who are old enough to remember the dot-com boom of the 90s, what we saw in 1994 was the early signs of what will happen. And you know, if we don't learn from our history, we're destined to repeat it. There was a lot of wealth created, a lot of opportunities created, a lot of opportunities missed. Some of the challenges that we had was timing, but we did see a crash. And a lot of people look at 1996 to 2001 as a bad time because of all the money that was lost. But if you have a perspective that goes beyond 20 years, you will find out that after the dot-com bubble crash, the IPOs got bigger and bigger and bigger, and more wealth was created. And so there are people today talking about the crypto market and how it's bubbles and it will be popping, and that's probably true. But what's also true is there's a change that's starting that's not going to stop. You know, the promise of the internet when it first happened was to offer people around the world the opportunity to connect and communicate. Ever since the first investment in the internet, now we're living in a world with 7.5 billion people. We've never had a chance in the history of mankind to ever have more open communication. We're also living in a time where there's a freedom to communicate and to express ideas. And you will find, because of the advent of what we're talking about today, anyone, anywhere in the world, literally can change it, can create an idea and have it spread. We came here from the States to Buenos Aires to meet with one company that we believe is going to, they are a global leader now, but we believe in the years ahead they will have a major impact. And the point is that on the internet, you could be anywhere. The disruption is in front of us. And so just a little history. There was not until even today, you know, if you're an entrepreneur in Buenos Aires, if you have a dream, it's hard to raise money, as I understand. 5 years ago, I met our host when he was coming to Israel, and he was showing me around. He was showing a bunch of people from Argentina and Uruguay around Israel, and I happened to have been sitting in an accelerator, and I was very fortunate to make a new instant friend. And life is funny like that. I don't know if you believe in serendipity and synchronicity. I don't know how to say that in Spanish, or intuition. But sometimes, like if you feel something, you go for it. And I decided randomly at that very moment I met my friend to invite everyone on tour with him for dinner 2 nights later on Saturday night. I made more friends. But what I really felt was a connection to people who have dreams. And when I heard how hard it was to be an entrepreneur, that if you're an entrepreneur in Argentina, particularly Buenos Aires, people say get a job. To get people to believe in you is hard. I mean, and that contrasts completely to the way I grew up. Because I grew up, my father taught me the best gift you can give anyone is to believe in them. And he said, it would tell me that the next person you meet can change your life. And that was sort of how I was raised, to actually take a chance on people, take a chance on ideas. And I've been fortunate in my life to be able to invest in about 400 startups. I learned a lot. I learned that making mistakes are okay. We learn from failure. And that's the only thing about failure. When you're successful, you sometimes don't know why. But when we fail, we have a chance to look inside and understand. And so when you look at disruption in the world, when I started working, we had spreadsheets. I don't know if how many of you are old enough to remember the introduction of spreadsheets to the business world. But the introduction of the personal computer changed everything, at least everything as far as I understood back then. And I was very active in the world of spreadsheets for many years. And then I had a life. And then I discovered a way to communicate with the world. I actually, just a little background about me if you don't know me, because it kind of ties into how I got here. Doesn't explain how I met these guys. So I grew up in a world where my friends were not around. I grew up in a very lonely way. I had people I went to school with. I lived in a town that had 50,000 people, but I didn't have many friends. But I discovered through my uncle radio. I don't know if anyone here has ever met anyone that's a ham radio operator where you can turn a radio on and talk to people all over the world. But when I was growing up, when I was 9 years old, my father told me to reach out to his brother, which I didn't do, but I was waiting for me home from school was my Uncle Fred. And he took me to his office. And he took me to a factory, and I didn't care, because why would I? But when he took me to a room inside his room, which was about the size of this table, there was a box on that table. And he flipped a switch, and I didn't realize that he had a microphone on one side. I was on the other side. And he flipped a switch, and it lit up. And he turns it on, and he turns a knob, and I hear noise, and he hears voices. And my uncle said very clearly for a minute, he would say, CQ, CQ, this is K2QQM calling CQ. And he repeated it for about a minute. He let go of the microphone. And for an hour, there were people queuing up talking to my uncle. All he said, his name was Fred. He was in New York, and he gave a signal report. And what I realized is that my uncle had the cure for loneliness. All I had to do was take this box and put it in my bedroom, and before I go to school, and when I came home from school every day, I could have friends. I may not meet them, but I could talk to them. But I didn't realize that the catch was, in order to have this box, I needed to be licensed. As a 9-year-old kid, I had to teach myself college physics. I had to teach myself rules and regulations to be a ham operator, and I had to learn Morse code. So it took me some time. I didn't get my license to talk until 12 and a half. But from that moment on, for the rest of my teenage years, I was on the radio 40 to 60 hours a week. And I had a lot of friends in Argentina. I actually can speak. I studied Spanish in school, but I learned conversational Spanish on my radio. I also made friends in Israel the same way. And that was my life, as I had me as my person, and then I was fighting this other life, which no one could understand, which was on the radio. And that was my internet. That was where my friends were. I would never meet many of these people, but I could turn the radio tunes and hear voices and know they were my friends wherever they were in the world. And that was disruptive to me. And then 20 years later, I find out that it's possible to talk on the internet. And what was very interesting for me is culturally, people who are ham operators, 20% of the people who use these apps were hams. So the same way we spoke on radio, we spoke on the internet. And we were communicating. And I saw something that was disruptive to allow people to connect peer-to-peer. So people now talk about peer-to-peer lending and be able to disrupt the financial markets. Trust me, disrupting telecom was pretty cool. And so what I did in 1995, which is why I'm here today, is I launched a free phone network on the internet called Free World Dial-Up. It was free, it connected the world, and it ran on dial-up. And there were people in Argentina that allowed people from New York City to make phone calls here. We had people. We had South America. We had Middle East. We had Europe and Africa. We had states and Asia, and it was a time where anything was possible. Practical, it did not work so good. It sucked, but it was a foreshadowing of what would happen in terms of what was possible because of the internet. And so I spent many years doing that. And that was disruptive. And the dot-com era created millionaires and billionaires. And now we're living in this new era. And I'm very grateful to be alive in this era where everything becomes possible. But the magnitude of change is much, much greater. So there is a time, there will be people you will read about. Maybe it's someone sitting in this room. Because of the change and the disruption now available because of the economics associated with cryptocurrencies and the ability to create your own local currency, and we'll explain that. There will be not only millionaires and billionaires and people who lose everything because we dreamed, there'll be trillionaires. We have to add a digit. It's not impossible today to say that people that are in this world today will not be actually sitting on $1 trillion. I don't know what you're gonna do with $1 trillion. I don't know what you'll do with $1 billion, but it's technically possible that you will find entrepreneurs. And the biggest change here is that we have the opportunity for capital to be available to anyone and everyone. That the gatekeepers for the dream is coming down. That if you're able to think about what you want to do and express yourself on the internet, the promise of the internet going flat, meaning that anywhere to anywhere is anywhere. There's been a lot of speculation. I mean, a lot of the reasons why people today, why you heard about Bitcoin or Ethereum, is because people see great value changes, that you put $1 in, you get $10 million out. That's possible. But what's really happening is a change in the ecosystem. And there will be lots of speculation, money gained, money lost. But what's happening from a larger perspective is shift of power. And that is not stopping. So you may see in the next year or two or three crashes in these markets because it's inevitable, but the long term is that there's a change that's underway and it's happening now. As an entrepreneur, there are many opportunities today for on-ramps and off-ramps, that is to get in, to do something and get out. And if you could learn how to not be greedy about it, because right now the commissions are very high, the opportunities, it's like the internet in 1994. And if you think about all the services that came into being, from PayPal and everything else to smooth transactions, all of that is needed to exist today. So in the world of Gotham City, this is Batman, this is Robin. I'm just their plus one, and I'll give Stephen the microphone. Stephen.
Thank you, everybody. Thank you for coming out. Wow, what a amazing outturn. 6 or 7 years ago, there weren't very many more people involved in blockchain than are in this room. That's the amazing thing. And I'm going around the world and I see the excitement that everybody has about it. And I, like Jeff, was involved in the internet explosion. I was actually in California in Silicon Valley while it was happening. I was running an internet company myself, and I saw the influx of people coming, and then it exploded and it got bigger and bigger, and then, as Jeff said, there was a crash where everybody thought it was the end, and everybody left. It's maybe about 10% of the people stayed. But those 10% of the people that stayed, that had a long-term view, that weren't there just for the money, and that's one of the themes that I want to talk about. Those are the people that actually changed the world. And if people remember, the Facebooks of the world didn't come out. Even Google came out right as it was crashing in '99. The real ones that changed the world didn't come out until after, and the ones that were before, a lot of them went away. And I think in this go around, you're going to see some different challenges. You're going to see probably some of the same parallels, but you're going to see that very condensed and compressed. It's going to move a lot faster because everybody saw what happened then. So it's going to move faster, and it's going to also offer us some twists and turns that we didn't expect, because we can't all possibly know. And I'm not particularly fond of the term cryptocurrency. because it's making everybody believe that this is all about just money, and this is beyond money. Does everybody understand everybody's heard of a token, right? Everybody heard of what a token is? Okay, so the token is the representation that sits on top of the blockchain. And the blockchain is the protocol or the technology that's underlying that. And one thing that I think there was a person or people, we don't know, called Satoshi Nakamoto, and that was the creator of Bitcoin. And he did some really amazing, he or them did some really amazing things. One thing they didn't do that was so amazing is that they called the token, which we call Bitcoin today, and the underlying technology, they called it both Bitcoin. And one of the things that we did at Ethereum is we called the token Ether and the underlying technology Ethereum, the Ethereum protocol. So it's very important to keep in mind there's two revolutions going on here, and they're both very exciting. They both have opportunities, but one is on the crypto, the word that we don't like, but the cryptocurrency and the token side. And that is a revolution happening. And everybody here who's transferred Bitcoin rather than doing a wire transfer, you get it right there. On the other hand, there's a whole other revolution going on beyond the financial, and that's in the underlying blockchain. And that revolution probably is actually bigger, because that revolution is what's going to disrupt. I would say I can't think of an industry that it will not disrupt in a very meaningful way. It's going to change the way business works in just about every single industry. And since they're all tied together, when one changes, the other one needs to change. So it's an exciting time. For those of you who think you've missed the boat, if I said the end was 100 and the beginning is 1, we're probably at 3. You're so early right now. This room is going to be an auditorium of 30,000 people in another 2-3 years. So grasp on, as Jeff said, there's dreams. I tell people be very careful about what you're investing in, because there's the investment side of the cryptocurrencies. 99% of those projects will not be around in 5 years. They just won't. That's okay, because that's what's needed for innovation. The ideas that we think about 20 years ago that seemed so brilliant at the time, and now you're thinking, oh my God, what the hell were people thinking? That made no sense, right? And there's a lot of that going on right now. And some people see that they make no sense, and then there are other ones that you don't get, that you think don't make sense, but they'll be the next Facebooks. And Mark Zuckerberg had a lot of hard time. He had a very difficult time he was raising US $500,000, and he couldn't raise it. Imagine that, right? A network with 2+ billion people now, he couldn't raise $500,000 because people couldn't understand the concept of what he was trying to do. And the people who did it before him failed. So I think what you're seeing is this revolution will allow everybody to participate in multiple levels. And that's a difference on the internet. So you can choose where you want to play in it, or you can just choose to watch it and see your lives change. And I'm going to just stop there for now.
Before I hand it over to Jacob, I just want to add a couple of points. The first one is that we are very early. We have to, as an industry, if you're going to be active in this industry, if you see something that seems bad, perhaps say it to tell warn your friend about it. We have, unfortunately, there's darkness associated with this industry with the word crypto. We're looking for a better word, because while it's true perhaps that some people in the early days use this for certain things that were not so good, there's been other great applications for it today. So looking forward, as an industry, we look to promote best practices, both for companies that are doing ICOs as well as exchanges that operate. But if you see a bad deal, warn your friends about it. I mean, it's true. There's the reason why you've seen the U.S. government come down on certain deals isn't because they're good, it's because they're bad. And that it's going to take time to weed out some of the fraud, some of the people that are taking advantage of your kindness. So that's something to be aware of, that not every deal, if it smells bad, it might be. Now, it could be an idea you don't agree with, and that's a $1 trillion idea. But if you sense something, say something, at least be aware of it. The other thing is that, and the reason, again, why it's important to understand, where you live in the world right now matters less than it did 20 years ago. Before, you had to go to Silicon Valley if you had a startup. Before, you had to maybe go to other places. Today, you could be anywhere. Literally, as long as you have connectivity, your dream can flourish. And that's a big change. And that's going to continue, that as long as you're connected in this world. The cryptocurrency, the world markets used to be New York, Tokyo, London. Now we're 24/7 anywhere. And that's a big change. Jacob?
I just want to pick up on something that Jeff said, and then I want to give a little bit of background on a few of the things we've said to give you a little bit of context, and then just maybe a couple minutes of thoughts about how to be involved for you guys personally. Jeff's point about the .com boom versus the cryptocurrency and blockchain boom, we've seen $600 billion worth of wealth created so far over the last really just 2 years in cryptocurrency, with real Wall Street and institutional money just coming in. I think there's orders of magnitude more money that will come into cryptocurrency and come into blockchain. And there is a unique distinction between this boom and the first tech boom, the .com boom. And Jeff said it. There, you had to either be a developer in the Bay Area or a VC in the Bay Area. That was the .com boom. I mean, not quite literally, but just about. And with cryptocurrency and with blockchain, you have as much access to everything that's happening as anybody else on the planet. And I'll come back and talk specifically about what I mean, but I just wanted to sort of tie it specifically to what Jeff said. Before I do that, we're throwing around words: blockchain, Bitcoin, cryptocurrency, token. And would it be helpful if I gave you guys 3 or 4 or 5 minutes on just sort of the quick history and define some of these terms to sort of tell you how we got from Bitcoin to where we are today in blockchain? Is that vaguely helpful? Show of hands.
Yes.
Okay. In 2009, Bitcoin was issued by some anonymous developer. And what it was a system for moving around internet money, Bitcoin. And what was unique about it that we'd never seen before in the financial system was that it was entirely peer-to-peer. And if you think about the banking system, credit cards, when you send money to somebody, you pay somebody, there's always an intermediary, the institution in between, debiting your account and crediting their account and checking to see that you have the money you say you have when you go to pay somebody. The genius of Bitcoin is it did away with that. The users of the network verify the transactions. You can think of it as a wagon wheel without the hub. It's everybody is on the edge of the network. There's nobody in the middle of the network. And there were some other very useful features about Bitcoin. Transactions couldn't be reversed. You can prove that a transaction happened because one of the innovations of Bitcoin, this is the next term to know, is the Bitcoin blockchain. And what that was in Bitcoin is roughly every 10 minutes, all of the transactions across the Bitcoin network, which is a peer-to-peer network. And by the way, to join the Bitcoin network, you literally download the open source software and start it running on your computer. And you're operating a full node on the Bitcoin network just like anybody else, with nobody authenticating you in. You don't have to ask anybody to join the network. You just join it. What the network does, everybody who's part of running the Bitcoin network, which is to say anybody who wants to be, they're all maintaining a copy of a shared database of all of the transactions across the Bitcoin network. But roughly every 10 minutes, those transactions are grouped into, quote, blocks. And every 10 minutes, a new block is added to the database. And there's all sorts of computer science and cryptography that ensures that once a block of transactions is added to the blockchain, the chain of blocks, they can't be changed, in part because each new block points back to previous blocks in a way that you can sort of prove if anything has changed. So that was the blockchain. I mean, it literally came out of Bitcoin. It wasn't a word that existed before Bitcoin. And then what happened is people said, well, the Bitcoin protocol, the Bitcoin network, that's just optimized for moving Bitcoin around. It's all it does. It was intentionally kept very simple. But the insight was anything else that you can represent in sort of digital form, you could move around on a similar kind of open protocol, decentralized. And so the ideas behind Bitcoin got abstracted, got generalized, and we started calling the whole suite of technologies that underlie Bitcoin and make it possible, we started calling that blockchain technology. Sometimes you hear distributed ledger technology or shared ledger technology. It's all the same thing, and all it means is it's the same sort of computer science concepts that worked for Bitcoin, you can apply to any kind of digital asset, right? Anything that you can represent is essentially in digital form, you can transfer ownership over a network like this. And then we saw an explosion of new protocols that weren't about just moving money around like Bitcoin, but for example, Ethereum, which Stephen was involved in from a very early stage, took the concepts of Bitcoin and then added the second major piece of the revolution. Well, maybe the third. Bitcoin, open, decentralized network that can move money around. Second piece of the revolution was the insight that it doesn't just have to be money; it can be any digital asset. And then the third big chunk was really the innovation of Ethereum, which added programmable logic to these transactions, something called smart contracts. So in Bitcoin, the functions are very simple. You can send somebody Bitcoin, or you can receive Bitcoin, right? There's a little bit more in there, but that's essentially all that anybody uses Bitcoin for. What Ethereum added was an entire programming language into the protocol, so you can do things like, if this event happens, send Ethereum to this address. If something else happens, send it here. So you can do advanced transactional programming. You can actually build financial systems on Ethereum in a way that you can't do it on Bitcoin. And that was really what gave rise to the explosion of blockchain. And then there was the sort of fourth innovation, and then I'll stop with my history lesson. This idea of tokens. And what about a year and a half ago, maybe it was 2 years, Ethereum, the developers, and again, by the way, nobody runs Ethereum or runs blockchain. These are open source systems, right, developed by an open source community. And there was a standardized protocol developed for how to represent a digital asset. In Ethereum, they're called tokens. So you hear about tokens and cryptocurrencies and coins, really all the same thing. But Ethereum added the ability for anybody to create their own cryptocurrency that would use Ethereum as its network. And when you say cryptocurrency, the word currency implies money, but you can you can create a quote token, a cryptocurrency, to represent anything: title to real property, intellectual property, the digital rights to a song. Right? And so it was really those four innovations stacked together that get us here, which is now we have blockchains, which are these open systems where data can be proven to be accurate, that can move anything that can be represented digitally around, and you can add complicated programming to it, and you see that the disruptive potential of that. Let me stop there. If there are more specific questions, we can handle them in the Q&A, and I just want to very quickly now personalize all this to the people in this room. So if you're interested in being involved in this community and this technology, what does that mean? First, a couple simple, stupid, practical observations. One, read a lot about it. Two, start buying cryptocurrency. You don't have to get into anything, strange or some marginal little cryptocurrency. Buy Bitcoin, buy Ethereum, buy the big ones. Start get into the ecosystem. And then there's really two other ways that if you're serious about it, you should begin to be thinking about involving yourself in the industry. One is it may be that some of you have businesses that make sense to either exist on the blockchain, as where the code base is on a blockchain, or maybe in part. And then the second possibility is, as Jeff said, there's this incredible opportunity now to raise money through what we call initial coin offerings, and it may be that you end up investing in those. And let me spend a minute now on ICOs. Unless, Stephen, do you want to do that? You want to sort of tell people what ICOs are and how they came to be? I think it all kind of started with you.
So everybody here has heard of an IPO, right? Okay. So an ICO is, and it's not the best term in the world, and it's changed over time. It's an initial coin offering, and now they're referring them to more as token sales. And then they have token generating events, and they have foolish investments, and they have crazy investments, and there's a lot of different terms for it. But effectively, what you're doing is you're taking, and they don't call these businesses. I'm not sure why, but they call them projects. And you're taking these, and you're effectively creating out of thin air these tokens. You're just creating them. And that's why when the word token generation event, you're generating these tokens, and you're generating them out of nowhere. But these tokens have some value because there's something called utility or functionality, and they do something. They perform some function. And that function supposedly is either valuable to the person buying it, or the person buying it believes it's going to be valuable to other people who want to buy it. And this is very different than what we saw. And there's a trend coming that we'll talk about later, but this is very different than what we saw with an IPO. Because you didn't buy a stock in a new company because that stock did something for you other than make you money. But a token actually does some kind of function. Maybe it gives you access to a service. Maybe it allows you to pay for a type of service. There's all kinds of ways, and there's new innovative ways that they're doing it today. But has anybody ever actually used a token? Actually used one? One. What did you use it for?
I can't hear you. Can you talk louder?
To pay. To pay. Okay, that's about the only use. That's good, because that's about the only use that people have actually had for tokens. So all these uses are promises that are going to come down the road. There are actually none of these projects that are really functional yet. That's why I say we're 3 out of 100 right now. And in these tokens, you don't generally have an ownership interest in the company, right? You don't actually own a piece of the company. What you're owning is some kind of right that the company is giving you. So if the company has some really cool software program or some really cool community that you want to access, and then they say you need to have 1,000 of our tokens to access this system or this service or this community, that's what it's giving you. And in the case of Ethereum, you actually, the token is Ether, and what it does is you need it to send it, number one. If everybody's heard of gas, you actually need it to send it. And these applications that are built on top of Ethereum, they need to be fed. They're hungry. They're really hungry, just like everybody here today. They need to be fed, and they get fed with Ether. And so it's like the fuel of the Ethereum economy. And different of these blockchains work a little differently.
To put things in perspective, last year I think it was like $3.4 billion was raised through this marketplace. I think in Israel alone they're talking about 1,000 ICOs. And it's just mind-boggling in terms of what that means. Jacob was hinting that we're going to see institutional money come into this. So I don't want to burst their bubbles. I want them to explain why in 2018 are we seeing institutional money, and maybe you could then set Stephen up, because what Stephen did, which he didn't explain, is that it's because of him that you guys are really here, because the entire worldwide ICO craze is his fault, because at Ethereum, they were trying to figure out how to raise money, how to do a crowd sale. And what they did, they were able to raise $18 million, which was 5 times bigger than any crowd sale in history before that. And he also didn't want to go to jail. He had something about not wanting to go to jail. So he spent 5 months working with the former SEC chairman and his team to figure out legally how to do this ICO, how to put it together. And all these people that you said 500 billion or 700 billion, most of the people that have created coin offerings have followed in his footsteps literally by by copying and pasting his work and creating it. So Stephen is really responsible, literally, for creating the killer app in crypto, certainly on Ethereum, because he created the ICO. But Jacob, could you just explain the difference between a utility token and a security token?
Yeah. So a little bit of context, and starting with Ethereum is a great place to start, because Jeff is exactly right. In order to complete the development of the Ethereum protocol, they needed money. They had a great idea. There was a white paper. There was an early code base, but it needed to be built out in a usable system. That means they needed to hire developers and pay developers. So they needed funding. And so the idea was, okay, well, we're going to have Ethereum. It's going to be the cryptocurrency of the Ethereum protocol. And you need Ethereum to do a transaction on the Ethereum network. That's why Ethereum exists. So why don't we, even before the protocol exists, let's sell some Ethereum to people. We'll get the money in, and we're not selling a security or something like that, and I'll get back to why I say that in a second. We're pre-selling our product. Ethereum is what you need to use in order to access the Ethereum protocol. So let's sell it before the protocol exists to fund the development of the protocol. And then when the protocol comes out, people will be able to use the Ethereum they've bought. We will have gotten the money to fund development. And here's what you have to understand about sort of tokens, and people call it token economics. Here's the idea. Here is why anybody would want to pre-buy. I mean, why would you possibly want to spend money now to buy the tokens you need to use a system that may or may not come into existence, in 8 or 10 months? And here is why. There's this thing about these token systems. When you create a token, a cryptocurrency, Ethereum, Bitcoin, I'm going to say all. I mean, they don't have to, but as a matter of fact, they all have a limited fixed supply. There's only so much Bitcoin that will ever exist, 21 million. There's only so many units of Ethereum that will ever exist. And these are network systems, right? You get network effect. As more people join, and if everybody needs Ethereum to use the Ethereum protocol, as more people join, demand goes up. You have a fixed supply, so the value of Ethereum goes up. And because these tokens, Ethereum, Bitcoin, they're all divisible, Bitcoin to 8 digits, Ethereum tokens to 16 or 18, you can have a fixed supply, divide it further and further, so each smaller and smaller unit, is increasingly more valuable. And it's that effect that created the whole concept of the token sale. And then people built on the ideas of the Ethereum token sale to do other sales of blockchain tokens, where the token was going to be the access token, the coin of the realm, the medium of exchange on this new blockchain platform that somebody was developing. And all of that makes sense. It's pretty straightforward, and it's pretty easy to argue that when you're selling a token like that, you're selling access to the protocol in advance. You're not selling a security. You're not doing something that should be regulated. We say that now, but that's only because of the work that Stephen and other early pioneers in this space did, trying to figure out what's the difference between a, quote, utility token, a token that people might buy because they're going to use it in some application, on the one hand, versus a security token. I mean, you could think about this. You could take the stock of a company and just issue it in digital form. No paper stock certificate. You just issue it as a token. And you could sell your equity by selling your token. Well, that's obviously, that's regulated activity, right? When people buy and sell securities, there's laws regulating that. So the whole question in these token sales, in these ICOs, is what you're selling, your product, where you're just pre-selling access to it, Or are you selling something that's really intended to be a fundraising vehicle to bring money into your company? Maybe the token provides everybody who buys it with a rev share of your company. Maybe you get dividends. Maybe it's actually equity. So you'll hear about in token sales, ICOs, this divide between, quote, utility tokens and security tokens, and that's what people are talking about.
And the thing is, about 2017, to me anyway, utility token is so 2017, because if you want to bring institutional investors into your company, or you want to see institutional investors come into this industry, they know how to deal with securities. They understand what a security is. The challenge is how do you do custody of a utility? So, and there's a lot of speculation, though, for all the people who have invested in currencies today. You know, at the end of last year, the SEC chairman basically said that he had not seen any ICO that wasn't a security. Now, he didn't say they all were not securities, but there's a big test, because if you are a utility that they say you're a security, there's a lot of banking laws that you may be accidentally violating. So for people who are conservative, or people who want to actually be predictive as far as how to handle something, and the reason why a hedge fund or a bank or a large investor could come in with more comfort is because they understand the rules and regulations associated with securities. And that's also disruption, because companies like T0, which we have done the ICO with, they're disrupting Wall Street, because you don't need to necessarily trade on the New York Stock Exchange anymore or London Stock Exchange. They created a token, they actually created a securities exchange for security tokens. And the whole mindset of decentralizing, or centralizing, but decentralizing, is now a game changer. And so for you, when you're thinking about your company, you can actually think about this process that you can actually do something. And to make proof of this, how many people here are familiar with RSK? A rootstock? So they're based in Buenos Aires. I strongly figure out where they are. We believe, I think I could say this, we believe that what Rootstock is doing is positively disruptive to the future of blockchain, to the future of the blockchain economy. And Stephen, who is the co-creator from Ethereum, so for him to come forward and say that, it was pretty, he said that on CNBC a couple of nights ago. I'm just saying it because I'm here, but also because I strongly believe that you could be anywhere in the world with a good idea. And I happen to be a very big fan of Rootstock. And if you, how many people here are developers, right? Wow, okay, and the rest of you, how many people here can afford to hire a developer? So if you want to look at doing a project in blockchain, you might want to check out RSK and Rootstock, because as far as a platform goes, it's hard. They're making blockchain technologies available to the masses, and the big change is that they are the first company to successfully take smart contracts and put it on Bitcoin. So until now, we're dealing with smart contracts running on Ethereum, and their disruption is that they're actually doing it on Bitcoin. And arguably, Bitcoin today is much more accessible than any other cryptocurrency.